Hello and welcome once again to our Global Capital Flows presentation, covering the second quarter and first half of 2013. My name is David Green-Morgan, Global Capital Markets Research Director at Jones Lang LaSalle, and today I will be presenting the results of our findings and looking forward to what we expect in the remainder of the year. This quarter, we'll be taking a closer look at cross-border activity and seeing who are the main players, where are they buying, and why are they buying. As always, the figures quoted in this presentation are in US dollars. So let's take a look at the headline numbers. Second quarter volumes continued the momentum of the first quarter with 16% growth, taking activity to $121 billion. This means that transactions are 10% above the second quarter of 2012 and first half volumes of $225 billion are 12% higher than last year. All three regions have seen growth in the first 6 months of the year, but it has been particularly noticeable in Asia Pacific, where a resurgent Japan has seen a 50% increase in investment volumes. European volumes have kept pace with the second quarter of last year, while in the Americas, improving transaction activity is spreading out of the US to Canada and Mexico. As I said, this quarter we are going to focus on cross-border activity a little more closely. Although the level of cross-border activity dropped slightly in the second quarter to 40%, overall the first half of the year is slightly ahead of last year. Consistent with the longer-term trend, we have again recorded more money moving between the regions than within. Europe continues to attract the lion's share of investment, with $12 billion invested in the region in the first half. The Americas and Asia Pacific have seen net outflows over the same period. So who are the major players on the global cross-border stage? There are some consistent performers, but also during the first half we have seen a step change in the purchasing activity of a couple of nationalities. The global funds in our definitions spend 100% of their capital cross-border. The Canadians, Germans, Singaporeans and Middle Eastern investors have been consistent cross-border players, but they have been joined in recent times by Norwegians and particularly in the first half of 2013 by the South Korean institutional capital. The list would not be complete without a mention of the Chinese, who are increasingly active outside China and have made some of the largest acquisitions over the first half. So where is all this capital going? Well, the new entrants to the global investment market typically target the largest and most liquid cities, and that is partly why London and New York do consistently well in our city league table. However, over the last 12 months, as pricing in the prime cities has become more expensive, so foreign investors have looked further afield, especially in the US, and that is why we are seeing improved volume growth in Los Angeles and Chicago over the first quarter. So what does all this mean for the rest of 2013? With first half volumes 12% higher than last year, with a continuing weight of money targeting commercial real estate, and with the rise in US bond yield seemingly a temporary event, we are keeping our full year forecast stable at between $450 to $500 billion. The second half of the year is traditionally busier than the first, with the final quarter traditionally providing a kicker to full year volumes, and we see no reason why 2013 will be any different at this stage. Well, that's all from me, and I look forward to bringing you the Jones Lang LaSalle Global Capital Flows update next quarter.